And now we see a number of actions in the inside the banks, like the intra-group volumes activities that are being pulled in one activity. That's more cost-focused activity. Then you can have, using that base to exporting volumes for third parties. That's an external to the bank decision. And then you can build on the revenue side, and that's providing value-added services that you do today to share with others on the innovation. And you think about things like mobile payments or e-invoicing, things that are already existing that some people may have advanced and put as a service for others, or value-added services that some ACHs and some clearing houses are offering, but some banks can offer. And you take the example of acquiring data intelligence that will help merchants to understand their client base and what type of services you can be doing. That's the type of services, you start with cost-focused, you increase the volume, and then you go in adding more value-added services, and that creates more new revenue stream. Of course, a lot of decisions, we'll look at 20 banks in Europe, maybe three to five have a clear vision of what they want to do. That's a black and white statement, but it's really that discussions about, do we want a centralized and integrated payment system that would allow easier performance measurement, customized value-added services, thorough pricing, faster and cheaper response to regulatory changes, and also take the high ground against the different new entrants to the market. Is certainly a key decision, and it's not an easy decision to make, but a lot of people haven't made it so far. So we see three attitudes basically in the market. We still wait and see and say, well, we don't have a end date, the regulation is not finished, that discussion between the sectional requirements and the rule books, whatever. There are good reasons not to do anything. And there are the other side, which is about improving efficiency, just work on the cost, discuss, and we'll see a number of RFPs, inquiries outside about how can you improve that bit of a process, Mr. Infrastructure or Mr. Bank, to help me reduce my cost. And then there are a handful of banks that have really decided that they will play the payments hub game. It's a heavy investment. I have in mind examples where banks have put between 300 and 500 million euros as pure investment, and they need to recover that cost quickly. They all have a business case they've shown to their boards, don't worry. But it's always a good business case. But it's really about that strong investment, the timing it takes, and the commitment to attract volumes. We made in one of the previous reports some extrapolation of what do we think is the right volume game if you want to be in the winning league. And we said something that around 10 billion transactions of non-cash transactions per year, that's desirable towards 2015 is the type of targets you should be shooting for. And that leaves a room for maybe 10 to 15 players in the European landscape. In the report, and we do an analogy with the custody business, the global custody business, where 25 years ago it was a flurry of players. There are now about 5 or 6 worldwide global players. And some of the very same triggers for change existed in the global custody business as it exists in the retail business or payments business. And that is regulatory changes, new technology, large investments in terms to be recouped, and the dedication of some people to decide that this is a business they want to be in. Now, I'm not saying the pace will be as quick as in global custody, and we end up having only 5 or 10 providers in Europe, but there's something to think about if there's a, I think, an interesting comparison here. So to summarize, I think today, if you take, and this is all a bit simplistic, but banks have to think about, define the role of payments in their overall strategy. Do they want to be a leader in this? Do they have the ability to do it? What are the revenue they have to protect? How is it essential to the client relationships, and how do they want to build on it? And then there's a very lengthy and difficult exercise that needs to play with scenarios and also with technologies, with partnership, which is really size the investment and the risk and decide upon going for the investment. And then the 2 last phases are just manage it properly, if I may say so, which is cope with the regulatory environment that is still going to change in the future, and certainly grow and capture the market share you want to capture. So that was a very quick snapshot about what we have in the third section of the report. And as Simon said, this report, the 6 years is sort of, you have episodes in there that build one upon another one. So, you can still have access to those reports at the Capgemini website, at the EFMA website, and also there are specific dedicated websites where you can find those reports. Thank you for your time.